Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over a bunch of different commodity companies. I'll start with the diversified mining companies. We'll hit some other things along the way. What I'm going to show you is I'm going to show you the big picture view. And what I'm going to do is I'm going to use chart patterns from commodity type companies. And I'll start with the diversified miners and copper companies and mining companies like that, just to show you a picture and to set a tone. What does that mean? I'm showing you the big picture of what is coming up through charting. Charts don't create big patterns and then fail to break out, or have broken out of big patterns and fail to move. I don't see that. They don't create the psychological structures to break them and then fail. I haven't seen it in history. So I'm going to kind of show you these pause points, these consolidation periods, and then the breakout of the consolidation periods. I don't think, and I know I've got a lot of people who are worried about an inverted yield curve. They're worried about can governments do X, Y, Z. You know what? I can't tell you everything about what they're going to do. I can't control what they do, but what I can control is what's in front of us. I can control the positions I take, the sizing I take, the jurisdictions. Those are the things I can control. I can't control if one of those jurisdictions decides to do X, Y, Z. I don't want to play the we'll call it the permutation of possibilities are endless. So I don't like playing in that world. What I like playing is what's in front of me. What does the current market conditions look like? And those are the things that I can go off of. And I don't have necessarily the fear. If you're going to have the fear, well then get some physical metals in your portfolio and drop that fear. I'm very optimistic. I'm very open to new ideas, and if I see opportunities like this, I want to jump on them. But that's me. Again, this isn't financial advice by any means. It's just my financial opinion. So let's jump in. I'm excited to get you guys some of this. Now, what I've got are the diversified mining companies. We haven't gone over them in a little while. What this is is a inverted head and shoulders. So we come up. We've got a shoulder, a head, and then a shoulder developing. Once this thing breaks out, it's going to be a big move. And usually the move is correlated to the size of that guy there. It's the bottom of the tip of the head to the neckline. And then it goes on the opposite side going up. So I'm sure it could go quite dramatic on a log scale. If you want me to throw it up there just to show you guys. And I don't try to get too caught up in the price predictions, even though, they're going to be probably quite massive. This stock could easily go to like $300 and be a big old boy move. Again, I don't try to get caught up in the predictions, but it's got the pattern, it's got the look. To me, this huge pattern's forming to break the threshold here, the neckline, trend line, resistance line, however you want to say it. So that's Vale. It looks absolutely beautiful. It's got a 12.9% dividend. If you're looking for a dividend that has some good oomph to it, VALE would probably be a good one to consider. COPX has been moving higher out of this little consolidation period. We're probably going to continue its way on higher for the copper COPX, copper miners ETF. This thing looks fantastic. It's got a double bottom. The volume stepping in. Everything looks exactly what I want to find in a chart. The fundamentals back it. We have, I think, a very big bull market ahead of us. And this is the bottoming pattern that's going to launch from. Looking at Rio, again, I'm going to take big picture views on all these. This is sitting on top of a pattern. We broke out. We did a retest. It is probably going to head higher over time. Now, I'm not claiming that it's going to head higher the next weeks or months. What I'm claiming is that over time, it's going to work its way up. And this chart looks absolutely fantastic for a move up. Now here's BHP, another one. Absolutely fantastic. Now you can see these patterns, right? And this is all very important to understand, guys. It's all important to understand. It creates these patterns in basically a large consolidation period. It breaks that large consolidation period and runs up. It goes into consolidation period, breaks it, and runs up. It goes into a consolidation period, and what did we do? We broke it, and it's going to run up. This is a stair-step pattern. That's what I call a stair-step. You've got a stair. You have a stair here, a stair here, and a stair here. That's your consolidation periods. Then you've got the up movements. We are in an up movement. Remember, this is the diversified mining company BHP. This is one that I have an overweight stake in, and it's paying a 9% dividend. It's going to pay you money as you hold on to this, and it appreciates. And the dividends get even bigger from your cost basis. Glencore, another one. Does that look familiar, this pattern? Oh, Andy, or I should say finding value, I didn't even notice, but that is a double bottom. And we've broken to the upside. So if you guys are holding on to Glencore, good job. It is paying a 3.31% dividend. And this is a bottoming pattern. Looks fantastic. Norilsk Nickel, we'll skip that. That is a disaster. But maybe it'll come back. Maybe it'll come back. Norilsk Nickel has amazing assets. Nickel assets are amazing. Their palladium assets are amazing. This company is a powerhouse. So when this comes back, and if the world decides they need nickel and palladium, this company is the beast. I'll just say that. Ivanhoe's one. Oh, look at this. Finding value. What pattern is this? All the shipping companies have this too, if you want to know. It's like a cup and double handle. It's got a little handle there. Boom. Higher. And it is moving higher. Go Ivanhoe. Tech Resources, another one. No way. Same type of movement. This is actually a let me throw the bottom here. Kind of a pattern that does this. It kind of squeezed up a little bit and then jumped. It's got the 3 humps, the hump 1, hump 2, hump 3, and then they usually break. So that's what I see there. Looks good on a long-term perspective. FCX, Freeport-McMoran, another one that's been squeezing up for a pretty long time, all the way since 2003. This is a big boy move, guys, and you're probably going to see this thing continue higher. The chart is very, very big. Southern Copper is another one. Look, this is an animal, guys, and I got in quite a bit in here. I actually bought it pretty cheap, to be honest, but we've got this consolidation period from 07 to 2020, and we've broken out. We did a retest move, and now here we are heading higher. This is a big boy pattern, probably going to move quite a bit to the upside. So on a big long-term perspective, all of these look fantastic. The big consolidation period, the move higher, the volume of people buying this, the volume is stepping in. South 32, this is a cut-off booty bottom, double booty bottom. I've got this one all marked up. Let me get some of these guys out of here real quick. I've entered this stock multiple times. And remember, it could do a retest move. I'm not saying it can't. There's your double booty bottom. And we've broken to the upside. And we could do a return move. Don't be surprised. I would buy the return move. But on a big picture view, looks fantastic. And Anglo-American Platinum, another one that I've been drawing stuff on. This is your big pattern here, guys. It came from 2005 into the corner here at 2017, and then there's your break. Just rocketing higher. It looks very good for a continued move higher. Would I buy it up here? Probably not. Not if you've got something like a Glencore that just broke out. But that looks absolutely fantastic. And then, if we were to just look around and look at the big picture view, I'm going to just grab random companies. Bannerman, does that look like a bottoming pattern? It sure does to me. It's got the bottoming pattern broken to the upside, and we're just breaking these little short-term patterns as we go up, the flag patterns. It's good that they angle downward. That means it's a continuation pattern to the upside. When they angle upward, and this, I'm not saying this particular case here, but when they angle upward and they create a pattern that angles upward like this, and then your stock comes up like this and contracts upward, that usually means it's going to break to the downside. So when they go downward, that usually means they break to the upside and it's a continuation move upward. But this is a big basing pattern that it's launching from. And whenever you look at some of these patterns from a big picture view, this is Goviax, you're looking at kind of that bottoming type pattern that's coming up and it's sitting right on top of its pattern to break to the upside. There's your downward sloping, basically a channel there with a break to the upside. If you look at, say, some of these other companies, and I'm just taking a look around, REMX, this is rare earth metals. This is a large double bottom pattern. There's your double bottom. The volume stepping in on the right-hand side, so people are accumulating this for a move higher. Now, my question is, what are the chances? This is my question for everybody, okay? The people who are scared and whatever. What are the chances that rare earth metals, copper companies, diversified mining companies, uranium companies, oil, natural gas, and tertiary stuff like zinc, aluminum, and all the other metals, what are the chances that they all are putting in bottoming patterns? They all have massive volume coming in on the right-hand side. What are the chances of all that happening at the same time? And do you think if they all were to happen at the same time, that that's just by happenstance? That they all have simultaneously the same exact market, supply, demand fundamentals? You think they all had it all at the same time? No, it's not. This is something bigger than that. This is a commodity supercycle. It's a big boom, and we're putting in large bottoming patterns everywhere. Now, if you're a technical analysis guy, and I'm both fundamental and technical analysis. When we look at this and we look at the big picture view, too many people get caught up in the short term. They get caught up in my account is down. How come it's moving sideways? And remember, we're looking at this from monthly candlestick basis on very long time frames. So if I'm looking at this REMX, this is from 2011 all the way till 2022. That is 11 years. This is an 11-year pattern, and we just broke out of this big old pattern to the upside, and it's been moving sideways since July 2021, and we're starting to break to the upside. This is a good opportunity, in my opinion. This is a big move that's coming, and I don't worry about why a company is moving sideways. That's the wrong question to ask. The right question to ask is, where are we in this cycle? And where I've showed you in all of these large big picture view things is we're just breaking out. We're just breaking out of everything. Now, what's the likelihood of this being wrong? I would say very low. I would say the likelihood is very low. I think the upside potential is very large. And the reason that I think it's very large is if you were to look at a ratio, and I go over the ratios, but I'll just touch on this one ratio here, the CRB index to the S&P 500. Let me get off log here. We had a long time frame from here to here where stocks outperformed during this period, and money went into stocks and not into commodities. We've had this large period and long period where commodities have underperformed and money has flown out. We just broke that downtrend, and we are heading higher. I don't think that whatever pullback we get a pullback that comes back, and I think we'll eventually continue higher in a stair-stepping pattern. That's how the markets like to move. They like to stair-step and go back and forth over time. And this could be violent too. It could be a violent move. I don't know necessarily the path it's going to take, but what I can tell you from a big picture view is everything is in alignment. Absolutely everything. I can't find a bearish commodity, a commodity setup anywhere. And I know people say, when everybody gets bullish, well, I'm not everybody. I'm looking at this going, my Lord. Here's the gold miners to gold ratio, the XAU to gold ratio. It's going to break higher soon, and we are breaking higher. This is the soon. We're breaking this right to the upside, guys. This is it. This is the sideways momentum, and now we're heading on up. So what I think is, get on it. This looks really good for all the precious metals mining companies and royalty companies and whatever else floats your boat. You can go into whatever you want. And here's my thing. If you are going to go into mining companies, and if you're going to take the risk, in my opinion, now's the time to do it. Because the stars are aligned. And that's the only time you go full risk, full send button. If you're going to send it full risk, full send, you send it with the lowest risk opportunity, the the best opportunity to do it would be when this is starting to turn just like it's doing and getting momentum to go to the upside. So this is when, if you wanted to go into a small exploration company, and if that's what you want to do, again, I don't have advice. I can't give you that advice. My opinion is, don't get too crazy on it. But now's the time. Now's the time to do it. That's my opinion here. And we go over this stuff on the website. We do the weekly meetings. I answer a lot of your guys' questions. I look at a lot of your guys' stock picks, try to help you out, and I'll give you obviously my opinion. But everything that I'm seeing on all these charts, they all look good. Everything. Uranium looks ridiculous, absolutely ridiculously good. So I would find it hard to believe, and I can't find any data in the housing market that's bad, at least not yet. So I still think we have at least 2 years of good times ahead of us, at least. I don't see the housing market crashing out of nowhere. And remember, inventories rule all. I don't care about people's opinions. I want to see data. And what I've seen from my years of investing is inventory rules all. You can't have a market go down with your inventory at low levels and depleting. That's my opinion on it. I haven't seen it in history, and I don't see when people talk about the housing market. The housing market's an integral part because that's where I think the inflation comes from new loans coming into the system against new homes. That is credit expansion, and obviously the government and Federal Reserve are doing all sorts of money printing things. And I don't know if that's inflationary or not. I don't know what the heck they're doing with some of this stuff. It seems like they're just flooding liquidity everywhere. But if the housing market, the thing I don't understand is the main we'll call it argument for housing to go down is that house prices are unaffordable. But here's my question. Every single top that we had a surplus of homes. If you don't have a surplus of homes, they are going to become unaffordable. And if you don't have a surplus of homes, doesn't that mean that the prices are too low? We have to have a surplus of homes. And I don't know how you could be in a bubble until you get a surplus of inventory of homes. If you don't have an inventory and it's at rock bottom, well, I don't know how you're going to resolve itself with lower prices. I don't know how that's a bubble. I don't really necessarily care where interest rates go. If there's no inventory of homes, if there is depleting oil inventories and gasoline inventories, I just don't know how the price can turn around. And it has to rebuild itself, which takes time. These things aren't like turning on and off a light switch. You can't just turn on the supply. You can't just turn off demand. It's demographic driven. It's structural by nature. And the charts that are laid out here over 10-year periods of time, that's all structurally driven. It's fundamental. It is baked into the demographics of the world. So you're basically arguing that the demographics don't want to become wealthier, that people don't want to become wealthier, that they don't want better lives, that they don't want heating in their house, that they don't want to have a car, that they don't want to drive their car, that they don't want to move up and use more energy in third world countries, that they want to starve and that they want to do all these things. Guys, it's not going to happen. That people are going to want to do things in their life. They want to eat. They want to remove waste from their homes and stuff like that, like with plumbing and getting copper piping and all this other stuff in their house. It's a basic want and need. And as people become wealthier, that's what they're going to spend their money on. That's going to be the number one thing they're going to spend their money on is food and housing and energy. So all the charts look incredibly good to me for a decade long, about a decade long. That's my guess. Could be, maybe it's only a couple years. We get a short little pullback. Maybe it's 2-3 years out, and then we resume again. And that pullback would be a liquidity driven event. I just don't know how it's going to. I don't think it's going to originate from the housing market because we don't have enough homes and we can't build them fast enough. That's my concern. But we'll monitor it on the channel. We'll monitor it. We do it once a month because that's how often the data is updated. This isn't fast moving, and it's going to take time. So my suggestion is be patient, take positions, do what is right for you, go into companies that fit your volatility tolerance, hold on, because the good times are coming. They're coming, and they're going to come very, very soon. I am positioned myself heavily in the energy sectors, oil and natural gas, uranium. I did get a couple of coal companies, guys. Yeah, I broke in a little bit and got some. I do have a couple of solar. It's not a very big portion of my portfolio. I have it in there just in case. I've got precious metals, royalty companies. I do have some mining companies that I'm speculating on. Might as well try to speculate on some of this stuff. I've got a large physical precious metals holdings. I do own my own house. I do think that's important. I bought that a while back, five years ago, 6 years ago. I don't know, whatever it is. But it's coming. So hopefully you guys are positioned well. If you guys need help, if you feel like you're lost, you don't know what companies you want, that you don't know what to do, sign up to my website. Get the Platinum membership. Why the Platinum? The Platinum will allow you to ask questions and answers during weekend meetings. And that will help you decide on maybe a potential, strategy or plan. And maybe we can talk about strategies and plans, position sizing, and looking at companies for this next bull market. If you're going to sign up, this would be the time to do it. If you are confused on what you want to do for going forward. Now, I can't give advice, but my opinions and what I do would be something that you could mirror if you'd want to. And I'm not trying to sell this to you guys. I mean, you can do whatever you want, but I'm giving you an option. I'm telling you that if you're going to do it, I would probably be doing it here shortly because things are looking very good to move. And I can't tell you if signing up is right for you. I can't tell you exactly what portfolio you have to have. You have to do some decisions on your own. But setting up for this, I just stare at this chart, guys. This thing's ready to go. Like, it looks so good. And if you look at uranium, and we were talking earlier this morning, or I should say, we had a meeting. I was talking a lot about the uranium companies, giving my opinion on some of my favorite uranium companies and the ones that I am overweight in. But uranium to silver ratio, it looks like uranium's going to outrun silver. Uranium looks like it's going to outrun the stock market. Uranium's going to outrun gold. And uranium's going to outrun probably even crude if we get a break here. What that means is that uranium's on the precipice of a big move. I can't tell you exactly when it's going to take off, but I can tell you it's probably going to be soon. I'm very excited for it. So if you have opinions, I have everything charted out. I've got the dollars per pound of market cap. So it's market cap divided by pounds. That's dollars per pound. I've got that all on the website if you need help choosing. It doesn't mean that the cheapest one is necessarily the best investment. What I'm going to say is what you're speculating on is that the one that has the largest enterprise value to per pound valuation appreciation is the one that's going to be the best investment during this cycle. I have my favorites. My favorites are located in, I'll say, Africa. And I've got a couple of favorites that are located in other areas as well, America and Canada. And hopefully one of those, or two of those, or three of those, or all of them do well during this next bull market. If you guys like the analysis, give me a thumbs up. Subscribe to the channel if you haven't. Subscribe to the website if you guys need some help. And hopefully you guys have a good day. This is Finding Value.